Top of the morning. Today, we are going to be covering essentially how to create a plan for profitable trading, not
Ooh.
just a daily plan or whatever most of the shit is on the internet, but really a guide to becoming a profitable trader.
It's what we all want at the end of the day, right? Profitability. I think that's why most people are in this. I imagine you're not in this to lose money. I know I'm in this to be profitable, that's for sure. So, Mike, let's hop in. How do I become profitable? What do I got to do, man? It's pretty easy, right? Just
First
a
off,
couple
let's
quick steps. We just hop right in. I mean, I've seen a couple videos out there. It's not much to it.
no, there's really not. So, I mean, let's get the basics out of the way. There is a lot to it if
There
you
is.
actually want to take it seriously, but there's not a lot to it if you just focus on the basics. So, we're going to start out with the basics for beginners, etc. Just get the minor things out of the way, but let's get a title on our screen first. So, how to create a plan for profitable trading.
Make that a little bigger for me, Mike. My eyes are struggling.
All right.
There we go. So why do I even have to have a plan? Why can't I just hop in the market and make some money?
Unfortunately, the market requires rules to really be any way, shape, or form successful. Not only does it require, just rules in general, like basic sentences of rules, but it requires discipline in many aspects. And the way that you do that or create that discipline is really through repetition of planning. So we're going to show you guys essentially how to create your own plan from ground up and not only the basics like a profit target whatever. We're going to dive into the deep stuff of really how to improve as a trader as well and create almost a roadmap to success.
Right. I mean, I was gonna say this is a business plan at the end of the day,
It
right?
really is.
You should be treating if you're taking trading seriously, this is business at the end of the day to you. Because a business is about the bottom line, and that's what trading is about, is the bottom line, right? Are you profitable or are you not profitable? That's a business. So treat it like a business. A good business has a plan. If a business doesn't have a plan, the business fails. If your business is trading and you have no trading plan, congrats, your business has failed. You are a failed trader. Sounds pretty simple, but honestly, that's really all there is to it. You have to have a plan. That's not to say that if you have a plan, you're going to be a successful trader, because you can have a plan that sucks, which is why we're putting this video together on how to create a plan that actually drives profitability rather than just creating a plan that's maybe based on, solely P&L. A lot of the videos out there, maybe we'll just kind of gloss over the basics, you know, make more money than you lose. At the end of the day, is that all you need in your plan? Yes, you need to make more money than you lose. That's all you need. But there's more to a plan that constantly improves your trading, a plan that truly drives your profitability and and drives your business of trading. Because again, that's the way you should be looking at this, is this is a business. So take your business seriously, take all the steps necessary to drive your business, take your business to the next level.
All right. So to go off of that, we're going to go into the absolute basics of our business plan. So the first step is really going to be deciding what you're going to be trading.
Ooh, that's a great place to start.
Ooh,
Are you typing inappropriate words on the screen right now, my guys?
I
This
am.
is this is unbelievable.
All right. So we're going to start with asset. Now, personally, I just trade NQ, but
Same here.
let's say you are a options trader, you've got SPY, a million different things to trade, or you trade Forex, whatever.
Bitcoin. I'm a big Bitcoin
Or you're
trader,
a
Mike.
crypto trader, yeah. You
All
have
I
to
trade is crypto.
define exactly what you trade. You don't want to be that person that is trying to jump into anything they see. For example, jumping on Instagram or X and seeing somebody calling out, this stock's gonna go to the moon, so
Are
you hop
you
in
are you
this.
telling me different asset classes move differently, Mike?
Yeah,
No,
they do in a way at the same rate. They pretty much move the same because it's all an
they
auction
do,
at the end
but
of the day.
you don't want to be necessarily taking strategies from one asset to another.
No, for sure. And there is a lot of truth to understanding one asset and
And
learning
that's the
how it
point I
moves.
really want to get at
Yeah.
is you should understand the asset that you're trading. So you can trade multiple different assets if you want to. There's nothing wrong with that, as long as you understand the asset or the assets
For sure.
that you're trading.
So to sum it up, you need to have a distinct thing you will be trading every day. That can be multiple assets. Let's say, for example, you're a futures trader, you want to trade NQ, you want to trade gold, and you want to trade crude oil, whatever. That's great. But for this example, we're just going to do NQ. So the next thing that we need to iron out is a session or a time. So instead of being the guy that will hop on for market open, trade 2, 3 hours, maybe he'll trade Asia the next night, maybe you'll trade London and you wake up, you trade London, or you start getting into trading crypto and you're trying to trade all the time. You need a distinct time. Treat it as pretty much a job. You're running a
It's a
business.
business. When do you show up to work?
Yeah, exactly. When are your business hours? So
It's a good way to put it.
we're not going to dive in this video of necessarily what we trade or what we think is the best time to trade. We're just going to focus on making sure that you can iron out that time.
In that best time to trade isn't a set time of day, right?
Exactly.
And that's something that applies to you personally. There's so many different factors that tie into that, right? Because everybody has a different life. Maybe you've got kids, maybe you have another job. Chances are you do have another job if you're just getting into this now. If you don't, you probably want to get another job. If you're just getting into this now, but there's other things in your life that you're gonna have to work around to fit your trading in at the end of the day, just like a hobby or anything like that. There's other things in your life that you have to work around. So, maybe you want to prioritize trading, um, but there's other things in your life. So where can you fit trading into that? But it also has to be a time where the
It's
market
consistent every day as well.
it has to be consistent, and it has to be a time where the market is moving in a way that lines up with your strategy as well.
Exactly.
So
Exactly. So the next basic thing we're going to be talking about is risk per trade or per session. So risk per session or trade.
I would argue that this is almost the most important of the basics, purely because you're going to lose in the market. At the end of the day, you're not going to have a 100% win rate. Boy, would it be lovely if you could have a 100% win rate, but it's not going to happen. So managing your risk, I would say out of the basics, at least for what we have up on the screen so far, I would argue that that risk is going to be the most important, without a doubt.
For sure.
Making sure, again, it's the bottom line. This is a business, so protecting that bottom line. How much as a business are you willing to lose?
For sure. And a good way to kind of gauge that and figure out that number is to zoom out. So let's go all the way to a month, not just down to a session. Let's figure out how much you're willing to lose. Let's say you are planning on losing every single trading day this month. What is that number? Are you okay with it? Okay, then divide it into 20 trading sessions. Whether you have a personal account, a challenge, whatever, or gear your risk to I'm willing to essentially fail 5 to 10 challenges, well, then gear your risk based on losing every single day that month. So for risk per session trade, finding your risk that you want every day, I would say base it on what you are willing to lose over a month span and put it into 20 sessions, just because 20 sessions is typically the average per
About a
month.
month.
Now, how are you going to figure out what you're going to risk per trade? That's a little bit different.
That one definitely can be a little tougher, unless you set for yourself. I'm going to take a specific number of trades each day, which would be a stupid choice to make, quite honestly. Where you say I have to take 5 trades every day. That's not something you should do. So yes, per trade is definitely something that can be a little more tricky, because that can also depend on volume in the market as well.
For sure.
Um, risk tolerance. Let's say you've already taken a loss for the day, so maybe your risk tolerance for the second trade of the day isn't quite as high as your risk tolerance
Yeah.
for the first trade of the day because you've already taken a loss. So that's something that definitely can be a little tougher to really set in specifics, but that is something you do still want to have set specifically. So how would you say you've approached that, setting specific risk targets per trade?
So I would say zooming out and going back to really what a beginner should be thinking about, I would say honestly make it something in the way of where what you think your average ATM will be, your average loss will be, make sure you can hit that 3 times because you don't want to come into the market and take a stupid trade right away, especially if you're scalping. That can be the most frustrating thing is preparing for the market coming in, taking a stupid trade, and you're done for the day. You want to be able to have that time in the market, and to have that time in the market, you have to have the opportunities to actually sit there
Yeah.
and trade it. So I would say a good general rule of thumb is just try something along the lines of losing 3 trades of around what ATM you would most likely be risking.
Or let's say maybe you're the kind of person who's like, I just want to be one and done for the day, right? That's fine. Maybe that's the style of trading you want to do. You take one trade, you're like, if it hits, it hits. If it doesn't, it doesn't. If that's the style you want to trade with, then obviously you just set your per trade loss limit the same as
For
that one
sure.
day. Um, Now is that the way I personally trade? No, that's not. That doesn't line up very well with the way I feel about risk tolerance. But if that's what lines up well for the way you feel about risk tolerance, and if you feel that that's the best way for you to manage risk, then maybe that lines up with your strategy. So you have to figure out what lines up best with your mindset and the feelings you get with risk, the feelings that you get with a loss, because any loss is going to evoke some type of response, some type of feeling. As human beings, we don't like to lose things. So there's going to be some type of emotional response when you have a loss in trading, even if it's on like a sim account or something like that, and you don't actually lose anything. You're still getting that same emotional response
For
of
sure.
loss.
And it can also tie into your strategy as well. If you're trading if let's say your edge is a very specific thing, you just want to take that one trade a day, let's say it's based on a market open move,
Sure.
etc., then yeah, make it so you can only lose one trade a day if you're only going to be given one opportunity. So it's kind of a not very great answer. It's not
It's
a
not.
nothing really in trading is to the point, but these are just general guidelines.
The point of this is to get you to create a plan for yourself for profitable trading. So what goes up on the screen here is not the plan for profitable trading. There is no the plan for profitable trading, excuse me. This is your plan for profitable trading. You have to create your plan based on what risk tolerance you have. So don't just write down the same things on the screen and expect to achieve profitability. You have to do this for yourself, right?
For sure. The next basic thing would be a profit target. I hear a lot of people talking about profit targets or you should go for 3R a day because if you can
Oh, it better
average
be at
that,
least, man.
yeah, if you can average 3R a day or and have one losing day a week, you can make XYZ. At the end of the day, your profit target should really be more of like a walk away amount instead of I need to hit this type of thing.
I would say it should never be an I need to hit this amount.
Definitely. A good way to think about it is, let's say your daily loss limit is $500. Well, if you find it comfortable to be able to hit 750 to $1,000, instead of trying to constantly push for more stuff like that, if you do get into that green, maybe have like a general idea of okay, I would be okay just cutting out and being done for the day as soon as I hit X. So then that way you almost have like a mental removal point because there's a lot of times in trading where you can come in, you can be doing great. Let's say that daily loss limit is $500 and all of a sudden you're at 1,500 in profit, but 2K sounds really good.
Sure
And then you
does.
take that one loss, all of a sudden you're back to 1,100 and then it just keeps repeating. You start essentially degenning and all of a sudden you're back at zero and then you hit your daily loss limit. So I don't necessarily agree with like a set profit target, but I still think it's a very good idea to have a general walk away target
Yeah.
or a number that makes sense with what your win rate is, winning days to losing days, to really come ahead at the end of the day.
I like that. Another thing I've been especially mindful of recently is noticing, is there a certain number or is there something in particular that occurs when I get to, a certain target profit or is a certain, you know, loss threshold? Is there a certain point where there's a change in my mindset in how I'm trading? So for example, like Mike said, his example with, I'm up 1,500 in profit. Boy, that 2K sounds nice. If I'm at that 1,500, I have that, okay, that 2K sounds nice thought. There's nothing necessarily inherently wrong with that thought because, yeah, 2K sounds nice when you're up 1,500. But if I have that thought and I say, I need that 2K now, I'm at 1,500, I'm going to get that 2K on this next trade. I'm going to get that 2K. Are you? Do you know you're going to get
Exactly.
to 2K on that next? You have no idea if you're going to get to 2K on that next trade. So if you notice yourself getting into that mindset where you start predicting things or assuming things once you've reached a certain target profit or maybe a certain loss level, if you start just guessing, just hoping, if you notice a shift in mindset either way with a loss amount or a profit amount, that's an amount you need to stop trading at.
For sure. And even having like an emotional stop as well.
100%.
Yeah. That's a great idea too. But really, those are the most basic things to create a plan. All you need to figure out is what you're trading, what time you're going to be trading, what you're risking, and what your general walk away point or profit target is. Now, with those things, yeah, it can maybe create some discipline, it can put you on the right track, but is that really going to deliver you to a path of profitability at the end of the day? No, there's
Maybe
a lot.
little bit,
Yeah,
maybe
yeah.
here and there, maybe some scattered profit.
For sure, but it will not guide you to the path of success. It will not hone your skills. All this is, we were talking about a business plan before. All this really is a to-do list at the beginning of the day. You need an actual business plan of how you're going to get better, how you are going to hit XYZ, and how you're going to progress. So,
Right. Because that's what this doesn't account for is getting better. This is showing up in the market and doing the same thing every day.
Exactly.
Following this plan. This is showing up and doing the same thing. I show up, I trade NQ at X time. I do this, I risk this much, I win this much. That's the same thing every day. You're not improving if you're doing the same
No.
thing every day.
no,
So again, maybe it leads to scattered profitability. You follow the basic rules of I make more money than I lose. Yes, you're going to be profitable. Are you going to be consistently profitable? Is this going to be something that can truly be a successful business for you? So let's hop a little more in depth and find out how you can improve your trading, how you can plan in a way that sets you up for success down the road, success that's something long term, success that's not something that's sporadic or something that you're hoping for. It's something that you know is going to be there when you follow this plan, but you have to have an in depth plan. So we're going to start hopping into things here. Mike's trying to find the right drawings for you guys. I know he loves his art, so he trying to make things all colorful and pretty for you guys. That's what he does.
yeah, it's gonna be real colorful, black and gray. But I'm just gonna lay out the basics and we'll kind of deep dive and have a little conversation of each point that I'm about to put on the screen. So the first one is going to be record.
Record what? What am I recording?
Record your session.
Oh man, every session? It sounds like a lot of work, dude. Got to record all my sessions. I don't.
Why is it a lot of work? Here, Andrew?
Man, it's just I just don't see the point, Mike. What? record my sessions. What am I going to do with those?
So
I'm kidding, by the way, guys.
that was a good joke.
No, I know it's so funny. No, you absolutely should be recording your sessions, guys. There's a lot of reasons.
So, even like a big excuse too could be if you're someone that has a very specific edge and you may only execute once in a 4-hour trading session. Why should I record that?
Yeah.
Well, you should record it because you will know exactly what the market looked like leading up to you making that execution. How else are you going to improve and learn from that day, whether it's red or green, if you just have a screenshot of what trade you took? I mean, it doesn't make
It's
a lot of
like
sense.
it's like reading one page out of a book.
No,
right?
exactly. Like all of these e-trading journals, okay, they're cool. It shows you what you made and lost each day and a screenshot of your trade if you put it in there. But
That's good.
it's
That's
good,
not great.
but it's not great. To be great, record your session, especially if you're scalping. It is insane to go back, especially on a terrible day, and
man.
rewatch the mistakes you made and just think, wow, I was not thinking with any logic or executing upon any logic within my plan or my edge.
Sometimes you'll look back and say, "Where is my strategy in that trade?" And guess what? It's not there.
No, it's
It's not there. So there's a a lot of benefits you can get from recording a session. Like Mike said, whether it's a red session or a green session, there's always something that you can learn. So not only setting aside the time to record the sessions, which realistically not that hard, doesn't take that much time, but set aside the time to watch those sessions. If you record those sessions and then don't do anything with them, well, that's kind of pointless.
yeah, it's useless.
You got to record those sessions and then you have to watch them after. And you don't passively watch those sessions either. You have to actively watch those sessions. And I would encourage you to watch those sessions back sooner rather than later. I wouldn't necessarily stop recording and then watch the session immediately, but if you can make time later in that day or at least the same later in the same week to review your sessions, that way you can almost try and remember what your mindset was like at that time because that's a huge part of trading is your mindset. So the sooner after, like I said, not immediately after, but try for the same day or at least the same week for watching those sessions back so that you can try and remember as best as you can what your mindset was like, what you felt like during those trades. So that's a big part. You can see we've got a data tracker up on the screen here as well. So not only tracking the sessions via recording, but also having a data tracker where, maybe things are a little more accessible, a little easier to see at a quick glance rather than sitting down and watching back a session. Because you're not always going to have time to sit down
for sure.
and watch a session back. You have to make time to do that, but you're not always going to have time
Exactly.
to do that.
And it gives a very good idea of progress as well.
That's a big one.
It's very easy to just go through a month-long sheet or a sheet that encompasses a whole month in literally seconds to understand what went wrong.
Yeah, so make sure in your data tracking that you incorporate what changes you make when in that data tracker and not just the raw data of your trades. If you have, right, I have all my data of my wins and losses on my trades. Okay, that's cool. Well, what did you change from week 1 of the month where you lost $1,200? Week 2, you made $2,800. What changed? You didn't incorporate any of the changes that you made on your data tracker. Well, now what? Now week 3 comes around. Well, I don't know what I did differently in week 2. So now I'm back to trading like I traded in week 1. So now I'm down $1,200 again. That's cool. Track everything.
Another
Be
thing that
intentional.
I want to highlight as well is not only record the changes that you're making and what led to maybe having a being in a better mindset, etc., but focus on the data itself. So let's say you are scalping, for example, and you're only looking for buys after the run of a market open low or something like that, or a market low, or current session low, sorry. But go through and record every single loss and win, section them into, was this within my edge? Was this the exact thing? Was I maybe early to the party? Was I late to the party? Was there greed involved? Did I not close my position in profit? Did I try holding it? Did I let a winner turn into a loser? Record all of those minute things just so you know each trade, what happened, and then you can go back and say, okay, it's September now. What am I going to do differently? Well, back in August, each week I averaged 4 to 5 trades that were outside of my edge and a few greed trades. Why don't I focus on this month trying to have only 1 to 2 trades outside of my edge and see where I end up at?
Why shouldn't I aim for zero, Mike? Why shouldn't I just
Aim for zero, yeah. But
you know, I did ask that question intentionally. Maybe you shouldn't aim for zero. Maybe you take 10 trades every week that
yeah,
are outside of your strategy. Realistically, are you gonna take that number from 10 to 0
no,
overnight?
no, you're not.
Probably not. Should you? Yeah. Yeah, you should. But progress is something that happens over time.
For sure.
So I would encourage you to also set realistic goals. But every trade should be within your strategy. Every trade should be within your strategy.
Let me make this a little pretty for you guys.
Oh yeah, I told you guys he wanted it pretty for you. That's what he does. My man's an artist. Look at that. It's beautiful.
All right. So the next one is going to be refining your edge. Now, it kind of goes a little bit on that last point. However, it's a little bit different as well because for the trade by trade data, you need to have a essentially defined edge. So
You have to know what trades you're taking, right?
exactly. Yeah. And the trade by trade data, you have to be able to outline if the trade was within your edge or if it was not. So the idea behind this part is hold on.
More pretty graphics incoming, folks.
Another line for y'all. Grabbing the wrong things.
I'm getting crazy. I'm getting crazy.
All right. So, anyways, how do you refine your edge? How you would refine your edge is having a specific edge in the first place, not just
It's a great
executing
place to start.
off of XYZ. So let's go back to my first example. Let's say you only take buys after the run of a session low.
Sure.
That's your edge. That is exactly what you define as your edge. So we are going to leave it at that. So how you would refine that would be tracking all of your trades. A good way to do it, we told you guys to record your trades, cut down into snippets of all the trades that were within your edge so you can rewatch them and see which ones worked, which ones didn't, just so you can have that mental playback, build that intuition. But another way is to kind of critique them in regards to, was I a little late on my entry? Was I X? Was I Y? Was I Z? Was this right at market open? Or
Right.
what time range was this around? Was this around news? Was this after news?
So
Find those nuanced things. If your strategy is very not pretty much mechanical, like if it is a strategy that can be written down in a sentence and it can be repeated and tweaked, that's how you should refine your edge.
yeah, you should always be looking for a way to improve your trades. I would say, even if it's a winning trade. You know, if you're watching back your winning trades, you say, this trade was within my strategy, right? This trade was within my risk tolerance. This trade was at the proper target profit. Does that mean it was a perfect trade? Does that mean that nothing can be improved on that trade? No. Does that mean you should get mad at yourself and be like, oh, I could have done this better. I could have done this better? No. It just means that there's more opportunity out there. Do you want your business to stay the same, or do you want your business to get better? Do you want your business to make the same amount of money, or do you want your business to make more money? I know I want my business to make more money. I don't know about you, Mike,
sure.
but sounds good to me. So even if you find something that's profitable, keep using that but improve it, refine that edge.
For sure.
So finding, maybe it's a confirmation within that setup. Maybe it's like you said, just refining the timing to essentially squeeze as much profitability out of it and reduce the risk as much as possible.
Yeah. Now, how would you tell somebody to refine their edge if it's intuition, kind of like how we trade?
So it gets a little tougher when you're trading off of intuition, but again, tracking the trades is the key here. Finding patterns is going to be, I would say, one of the main things, and finding what works consistently. Even within my, whatever you want to call it, intuition based entry model, there is still mechanical there's mechanical things I'm looking for. There's structure within the market that I'm looking for. So seeing, where those things line up with the intuition that I have for entries. So again, it all comes down to the recordings, tracking the data, and then separating those recordings, finding the patterns, seeing what works, what doesn't work, what kind of trades do I need to eliminate from my arsenal. Essentially, that's my constant goal, is get rid of the bad trades.
For sure.
Get rid of the bad trades, because there's always going to be bad trades. So if there's a new kind of bad trade comes up or something like that, I'm always trying to eliminate that or minimize that. Because again, you can't eliminate loss in trading, but you can minimize loss in trading, which is what this is all about. Risk management: minimize your losses, maximize your gains. How would you say you approach refining edge with intuitional entry?
I would definitely say rewatching just losing sessions. I
The
mean,
losers are the best.
yeah, just rewatch your losing sessions over and over and over again. And don't just sit there and watch it blankly, going on your phone, whatever. Sit there, rewatch them with a lot of thought going into it. Prepare yourself. Treat it as if you're about to take an exam and you need to study for this because your business depends on you passing this exam. Focus on all the nuances, focus on the price action that's going on, focus on right when you enter, try to remember how you felt, etc., what led you to even click the button, things along those lines.
Watch it back 25 times if you can't figure it out.
Yeah, exactly. And an easy way to do that is by chopping up your trades. So if you scalp, let's say you had 10 trades in a day and you were trading for 45 minutes, well, you can probably make that a 3-minute video. And all of a sudden you can rewatch all of the points in the market that you decided to execute and learn from it. But I would say that is the best way to really refine your edge. It all ties back into recording, but
Sounds like both of us focusing on the losers. Focus on the losers. I would say that would probably be my most important recommendation, I guess I would say, in data tracking, is focus on the losers.
yeah,
I did address before, trying to maximize the profitability of the winners, but the more important thing is focusing on the losers and how can you eliminate
For
and
sure.
minimize the losses.
the winning trades are going to come. You're going to eventually develop an edge, and no matter what you're doing, all you need to focus on right now is just trying to get better every single day and minimizing the opportunity of loss or the possibility of loss. But the next thing that I would recommend is a week review and a month review.
Mhm.
So this is very crucial because if you sit there and spin your wheels for 6 months, that means that you're either trying to do everything or you're not changing anything. So let's talk a little bit about that. What should you be reviewing? What should you be changing? How should you go about that, Andrew?
Yeah, so I would say reviews, again, the recording of the sessions. So like I said, if you can watch your sessions back, maybe let's say you trade, for example, in the morning. Let's say you trade that 9:30 to 10:30 a.m. that we got up on there. Maybe 7 p.m. every night you review your session. Otherwise, let's go on the week basis, right? Let's say Sundays, you set aside 2 hours every Sunday to do your week review. Watch every session. So maybe you have to set aside more than 2 hours. That's fine. But set aside a specific amount of time and make sure that time is only for session review That means you're not doing anything else while you're doing session review. You don't have two things going on at once. Maybe you're the type of person that has to shut off their phone while they're doing this. If you do, that's fine. There should not be any distractions while you're reviewing your sessions. It should just be you and the sessions. Just like when you're actually trading, it should just be you and the sessions. There shouldn't be any distractions. It should be the same thing when you're reviewing, because when you're reviewing, you want to try and get in the same headspace that you would be in while you're trading. So ideally, you're going to be honestly in the same room as you would be in when you're normally trading, on the same computer that you normally be trading on. You want things to kind of feel the same so that you can get in the trading headspace while you're doing your session reviews. So really, again, focusing on the losses, because that's what it's about at the end of the day, is minimizing your losses. So focusing on those, but not focusing on them in a negative way of, wow, I really suck at trading. Look at all these losses. It's always, wow, trading has so many opportunities. If I just eliminate these losses, look at what's possible.
For sure. So, some real basic points for what you should have in your week and month review is what was the reason for your losses? If there is a trackable reason, was it outside of your
Oh, there's
edge?
always a
Was it-
trackable reason.
Yeah. So figure out a way to track those reasons, figure out the reasons why you lost, figure out the type of trades you won on, and categorize those, understand what your win rate was. And that gives you a very good basis to go off of and understand what you need to correct for the next week. So, for example, I'm primarily like a direction trader or continuation trader. I document anti-direction, or if I was trading within direction, but if I was early on direction, just little code words like that so you understand generally why you lost. You got to make sure you have that so that way, let's say this week I was red, but I had 8 anti-direction trades. Well, next week I need to focus on definitely not taking any anti-direction trades or mitigating them.
Seems to be a problem.
So that's why we have to zoom out to the week and month review, because that's how you're going to find those bad habits. Because otherwise, if you just trade day to day, like everyone tells you to do, here's your plan right here, just do this
Done.
and you will be profitable. No, it doesn't work like that. You need to review it, treat it as a business, go over every week and month review, have a quarterly business review, really, and just understand what the numbers are and why you aren't successful or how you can become more successful.
I was gonna say, don't be afraid to give yourself a bad review.
Yeah,
That's okay.
exactly. All right. So, really, what that leads to is just setting aside specific time to understand what went on that week or month and finding the patterns. That's it.
Another big thing I would encourage with those week and month reviews is see if you can notice any factors outside of trading itself that affected your trading as well. Right? Maybe the first week of the month was a great week for you. Work was pretty easy. You weren't stressed out. Nothing too crazy really happened. You had a great week. Maybe second week of the month, maybe things were a little tougher. Your boss piled a bunch of things on you at work. You had a bunch of extra stresses. Little Timmy, your son, he fell off his bicycle. He broke his arm. Now you got big hospital bills. You're stressed out, right? Did that affect your trading? Chances are it might have. So notice those patterns, notice what types of emotional stressors affect your trading, because there's certain emotional stressors that you're going to have every day that you are going to have to learn to deal with. You are going to have to find a way to essentially set those aside, block those, battle those, whatever you want to call it, while you're trading. But then at the same time, there's emotional stressors that maybe only come up every now and then. Maybe those emotional stressors should completely stop you from trading. So maybe, for example, you notice that if you get really stressed out at work and it causes you to be angry, maybe you notice that when you get angry, you always trade poorly. So now, anytime before you hop in the market, if you notice you're angry, should you hop in the market? You know what happens when you hop in the market when you're angry, because you did your week and month market reviews. You reviewed your data, you saw that, okay, when I get angry, I trade poorly. So now you know before I get in the market, okay, I feel angry today. Maybe I shouldn't get in the market. So not only should you be doing a data analysis, but you should also be doing an emotional analysis. And then every time before you get into the market, you should be doing a quick little emotional analysis of, okay, how am I feeling? Is this going to be good for my trading the way I'm feeling right
For sure. And we can parlay that conversation into correcting the loops. So you need to identify all of those loops as we were talking about, whether that is within your edge, just the basic statistics of your business, but then the emotional statistics as well. And then you have to take those and correct them, figure out a way to eliminate them, get better at them. So, how would you correct the loop of, let's say, you're a direction trader, but you always want to trade that anti direction to predict the low? How are you going to
now?
correct that?
So anti so I'm a directional trader and I struggle with I always want to trade the anti-direction to find the low.
Correct.
Okay.
Yeah.
So
You always want to be a cotton picker, as Tom Grove would say.
oh yeah, yeah. So I would say the biggest thing is going to be first off, why? If I'm a directional trader, why do I want to take that trade in the first place? Because there's some reason that I'm taking that trade. So I can set a rule for myself that I'm not allowed to take that trade. Well, guess what? I'm a directional trader. I'm not allowed to take that trade to begin with. So what does it matter if I set the rule that I'm not allowed to take that trade? Because based on my strategy of being a directional trader, I'm not allowed to take that trade anyway. So I could make that rule for myself. So it really comes down to why. So let's say, for example, it's greed, right? It's greed. So I'm a directional trader. I'm up $500. We're in an uptrend. So I've taken 3 scalps, let's say, in this uptrend. I've taken 3 little legs up on this uptrend. Fantastic. Now I want to be right. I want to have a certain profit target. And we've already made a couple legs up. I'm only trading with the market, but we've already made a couple legs up, so we're probably going to turn around. Now I'll take a short, because we're probably going to turn. That doesn't line up with my strategy. Why? Well, I wanted a certain profit target. I gotta hit it.
I got to hit that perfect entry at the bottom tick to get to X.
Oh,
So yeah, break down the why of why you are
Maybe.
repeating these mistakes, and then break down an action plan as you kind of alluded to, as in I am not allowed, this is a rule, I am not allowed to take anti-direction trades, and document how many anti-direction trades and how many days you can go in a row of following that and see what success that leads you to.
yeah. And maybe it's not greed. Maybe it's purely wanting to just be right. Yeah, and predict the market.
Yeah.
Be like, oh, we have to be going down here. All right, sure. It can be tough to stick to your strategy if you see something that's maybe outside of your strategy that maybe you think is going to happen. Maybe it does happen, right? Maybe you used to trade a different strategy in the past. You trade a different strategy now. Oh, but you see your old strategy pop up. You want to do no, you don't trade that strategy now. Trade your strategy. Okay.
For sure. That's the only way you're going to be able to even identify loops in the first place.
Right. Is sticking
Repeatable
to
actions.
a
Exactly.
strategy. So if you're trying out every strategy in the world and just seeing what sticks, I'm gonna try this one. I'm gonna try this one. If you try a strategy for a week, 2 weeks, even 3 weeks, 4 weeks, chances are that's not enough to really know. You have to have the data. You have to record your sessions. You have to track your data. You have to review your data in order to correct the loop. So that's what all of this is bringing us to: the recording, the data tracking, the refining the edge, the reviewing all of your data. What is that for? That's for correcting the loops. That's how you correct the loops, is you do everything we just talked about. You record your data, you track it, you record your sessions, you track your data, and then you analyze that data as a business to figure out, how can I improve my bottom line.
For sure. So those are really the, the way to correct those loops. Now, let's just talk about one last thing that I feel like most people try to put to the wayside, or they just kind of throw it out there. Oh, it's trading psychology, whatever. We're going to approach it in a little bit of a different manner than what you normally hear. So, a lot of people will say, you know, your your life is a reflection of your training. Go take a cold shower. You have to eat this and work out every day, all of that, and you'll become profitable. Well, that's
Some of those are good things, you
yeah, I
know.
mean, they're good things, but we just need to focus on the outside factors and how we can really make our life better in general to then allow us to be a more level-headed, peaceful, and disciplined trader.
Yeah, it's you're not fixing your life, or you're not doing this to become a better trader. You're doing this to become a better person, essentially. But it has positive effects on your trading. You might be thinking, "Oh, I don't care. I'm going to turn this video off now because I just want to make a lot of money." Well, that's cool, but you have to focus on those outside factors and figuring out, you know, what's causing you to not be profitable, because it very well could be something that's not even within your trading.
For sure. And some examples could be, financial stress. Let's say it's financial stress, your bills are piling up, you found some videos online of a guy making $25,000 in a day, and this is your last ditch effort
Well,
to pay
dude, it
those
took
bills
him
off.
20 minutes,
Yeah,
$25,000, 20 minutes,
exactly.
pretty quick. I mean,
Exactly.
looks like there
So
wasn't much risk involved. So,
that's where you got to analyze really your life in general and figure out what things you can do at all times to just become better in general, because it'll trickle into your trading, whether that's the goal of it or not. If you eat better, it's going to trickle into your trading. If you train hard in the gym and run or walk or whatever, it's going to trickle into trading. If you're in a financially responsible position, let's say getting that different job that will keep you in a better place financially until you are a profitable trader, or budgeting correctly.
right. I was going to say, just take this discipline, this same discipline that you would apply to trading, and apply that across your life. Um, so
It's going to make
plan
it
things
so
out.
much easier to come in disciplined as well if your outside
Right.
life is disciplined.
You
So,
can't, I would say you can't pick and choose where to be disciplined in life.
yeah,
Honestly. A lot of people will like to say that, you can work hard and play harder, which to a point is true. Um, but you have to be disciplined really in all areas of life. You can't expect to have no discipline anywhere in life and then show up in the market, be perfectly disciplined, follow your plan perfectly if you don't follow the rest of your plans in life. Like, let's say you have a habit of making a to-do list for yourself every day, and you don't cross everything off your to-do list. Are you going to cross everything off your trading to-do list?
hell no, not every
No.
day.
No, you're not. So analyze what in your life needs to change. Everybody has things in their lives that need to change. There's no shame in that. But there are things in your life that you need to change that will drastically improve your trading. Things that aren't related to trading at all. Things where you're like, why would I even bother with this? This is a waste of time. This isn't going to help my trading. Well, yes, it is. It is going to help your trading. So find things that, bring you peace. Find things that make you calm. Find ways to manage your emotions, manage the stressors. Like I said, there's going to be stressors. You're going to have to learn how to trade through stressful times. There's going to be, down weeks. Maybe there's down
And
months.
one thing that can help with that is really building rock solid relationships.
100%.
So focus on relationships too. You got to have somebody to fall back on when things get tough, because things will get tough on this
Oh, they
road of
will.
trading. But guess what? They're going to get tough either way, if not more tough, if you don't focus on it and build yourself a better life.
Yeah.
So
Yeah. Family, friends, keep the people around you close. And I would encourage you to, surround yourself with people that build you up, lift you up, not people that tear you down and make it harder to find success. Find people that, drive you to success. It doesn't even necessarily have to be people that are, above you financially or above you in any way. There can be people who have significantly less money than you, people who don't trade at all that could help you so much in your trading. But don't focus this relationship building on trading, even focus this relationship building on improving yourself as a person, and enjoying your life. Because at the end of the day, you could make $10 million trading, but chances are if you don't have any relationships with anybody, you don't have any people to share that $10 million with, it's going to be a pretty sad $10 million in
Definitely will.
your big lonely house. Be a nice house, but
For
be
sure.
lonely.
But this is really a great way to get you started and put you on the right track. If you're in a tough spot with your trading, just promise me this, that you'll take exactly what's on this screen, write it up, create it to how it fits within how you trade currently, and do it for 1 month. See where you're at the end of the month. If you're red, great. You did all of the things to now make it a little less red next month. And
Maybe
that's what
it's
you
green.
need to focus on. Or green.
Who knows?
So just I implore you guys to do that for 30 days. Do it and see what happens.
Hold yourself accountable.
Yeah. The 99% of people that fail at things is because they don't stick to what they want to do. So just stick to it once. If you really want this, you'll stick to it.
You will.
So do it. But that's about all I got.
I
Andrew,
would
you got
say,
anything
yeah,
else?
that's it. Like I said, there's not a V plan. Like Mike said, sit down and tailor this to yourself. Because at the end of the day, you can't take anybody else's strategy or plan. You
No.
have to have your own strategy or plan, because everybody's mind is different. Everybody's risk tolerance is different. Everybody's plan has to be different. So find your plan, live your life, make it happen.
That's right.
This is Vanquish Trading Company.
If you guys did like it, hit a subscribe, like it, comment what you learned. Comment 30 days down the road if you actually followed
Yeah.
it. I bet you didn't.
Yeah.
So
And
take
no
that as
lying
a-
either.
Exactly.
Honestly, don't be ashamed to admit you didn't follow it. Say, you know what? I followed it for 29 days.
And tell us what you'll do differently.
Day 30, I messed it up. Well, guess what? Congrats. You have another month after that. You got another 30 days. You can try again.
Exactly.
And that's what it's about is not rinse and repeat, because you don't want to do the same thing, but wake up every day and get in the market. Not necessarily right when it opens, but get in the market, learn what you can, change the things that need to change, go live the rest of your life. That's all I got for you people. Happy
We'll leave it
profitability.
on that. So get to work, and we will see you guys in the next one. Thank you.